All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Happy Inflation Day, everybody. Today's May 13th, 2025. And the top story this morning, we got CPI, or the Consumer Price Index, the most common measure of inflation in the market. And surprisingly, it was a beat to the downside. Year over year, 2.3% inflation. The market was expecting 2.4%. And that is down from 2.4% last month. So it was viewed as good news by the market. We had a little bit of a rally, a little bit of a rally on this news. I think there was a little bit of fears that maybe some of the tariff worries had filtered through to the inflation readings already for the month of April. That was not the case. Now, I didn't really expect a big impact from the tariffs because they didn't really go into effect yet. Nobody was really seeing tariffs reflected in the prices they were paying at the store. But there was some fears that the fear of tariffs might change people's consumption habits, cause people to pull forward some of their spending, buy the stuff before it gets more expensive. And then that would cause those higher prices to manifest early. Well, it looks like that didn't happen, at least not yet. It was a beat by virtually any measure. Core inflation also came in lower than expected. A couple of interesting things. The shelter index remains the biggest driver of inflation. Owner's equivalent rent contributed more than half of the overall increase in the index. Some interesting things going on in food. We had food away from home, i.e. restaurants, got more expensive, even though the restaurants have reported some pretty lousy earnings. But food at home, the grocery store, that got cheaper. Those two things offset each other. We've also got the energy index was pretty noisy here. We had cheap gasoline, cheaper fuel oil was offset by more expensive electric and more expensive natural gas. I think right there you can see the AI mania playing out. We built all these data centers. These things are just power pigs gobbling up electricity. And right now we're building electricity demand a whole hell of a lot faster than we're building any electricity supply. So that's driving natural gas prices higher and electricity prices higher. And interestingly, we saw used cars get a little bit cheaper too. That one kind of came as a surprise to me. But overall, it was kind of a non-event, at least for now. The inflation data is not that alarming. But guys, I feel compelled to point out, we're looking at 5 years in a row now that the Fed's arbitrary 2% target has not been hit. I mean, eventually we're going to get around to hitting that 2% target. Eventually, maybe, I don't know. Hey, wouldn't want you to make life any easier for the average person. Silly me. I know. Where do I get these crazy ideas? They just come to me. I don't know. Also, big news going on this morning. United Health, the company everybody just loves to hate. United Healthcare, back in the news today. That stock is down big double digits this morning. Their CEO has abruptly resigned. He's out effective immediately. The company also pulled their guidance for the year. This comes just about a month after the company lowered their guidance. I don't know what's going on at United Health, guys. This company is up to some stuff. Look, these guys are sleazeballs, all right? I mean, ever since that CEO was murdered in the streets in cold blood, which, by the way, the guy who killed him was also a dirtbag. I think people walking around with assassins' pictures on their T-shirts are freaking a-holes, to be honest with you. That being said, this is a shady company. They're already under DOJ probe for Medicare fraud, something I covered over on Doomer's News Network and a couple of times on this channel. They were overbilling people for Medicare Advantage plans, or I should say they were overbilling the government to the tune of tens of billions of dollars a year. They're under investigation by the DOJ for that. Of course, ever since the CEO's murder, people have been paying a lot of attention to this company. By the way, that was the United Healthcare's, one of their division CEOs, the guy who quit, not the same role. This was the corporate umbrella CEO who stepped down. I don't know what this means, but when a CEO abruptly resigns and the company pulls their guidance, it sure as heck isn't good news, that's for sure. And investors are reacting appropriately this morning. You can actually see the moment this news broke. You can see it in the Dow chart. I'll show that to you this morning as well. We got a lot of developments in the trade war going on this morning also. First of all, freight rates are set to explode here. Now, we had that big blowout in the GDP numbers in the trade balance. Remember, everybody was trying to front run tariffs, buying things ahead of time before prices went up. And so we had that big surge of imports, and it caused GDP to go deeply negative. And then, of course, we had the tariffs were announced on Liberation Day. Freight rates collapsed because everybody canceled orders. There was all these rather misleading headlines like, no ships are coming to the United States. There was always ships coming to the U.S., but they were slowing down. Well, that is all going to suddenly reverse now. Since this pause, the 90-day pause that was announced yesterday, the deal that wasn't a trade deal, depending on who you ask, because we get hung up on silly definitions, that is going to cause a surge of sudden demand for freight, because once again, importers are going to be like, whew, that was close. We almost had to pay 145%. Quick, buy everything we need for the next 6 months in the next 90 days to prevent those prices from going up again. So we're going to see freight rates skyrocket as people, again, try to cram their stuff into the U.S. ahead of time. That's going to cause those shipping container rates to go up. That also virtually guarantees that the U.S. officially enters a recession, because contrary to the change in definitions that we had during the last guy in the office, now that there's going to be 2 consecutive quarters of negative GDP, we will almost virtually all agree that it is a recession, which it is. 2 consecutive quarters of negative GDP is a recession. It doesn't matter if a Democrat or Republican's in the office. That's how that works. But this surge of imports that's going to happen now is going to drive that net exports deeply negative. That's going to detract from GDP. That'll make 2 consecutive quarters. Hence, the definition of a recession is met. Now, we have some other stories going on this morning. China is finally relaxing their ban on Boeing jet deliveries. Again, fallout from this trade deal that wasn't a deal, whatever you want to call it. They're going to let the Boeing jets come into the country now. And the United States, we have President Trump just issued an executive order lowering the tariffs on de minimis orders. That's something that was conspicuously left out of the deal yesterday. That wasn't a deal. Can we stop doing that now? Thank you. Okay, that's back on. We got news about the de minimis shipments this morning. We've got India is considering retaliatory tariffs on the United States now, according to a WTO document that's circulating. That's news. It seemed like we were hours away from a deal announcement with India. Some of the language coming out of D.C. suggested it was close. Now, over the last few days, we're kind of seeing a little bit of things say maybe that's not so close. Maybe things with the Indians aren't quite so copacetic. Keep in mind, the last time anybody put any retaliatory tariffs on the United States, Mr. Orange freaked out and the tariffs went right back up. So India's kind of playing with fire there. They're playing hardball with negotiations. I can't say I blame them. It's in their interest to do so. Just try not to set the place on fire. I don't know what to tell you. Also, the president is in the Middle East this week. We're expecting some big news on AI chips and semiconductors. He's in Saudi Arabia right now. Now, look, President Biden's rules on export controls for AI chips, known as AI diffusion, are set to go into effect in the next few days here. President Trump is believed to be partially rolling back those export controls for specific countries, using them as a negotiating chip, in no pun intended, in their trade deal negotiations. So they're expected to be some kind of announcement with Saudi Arabia today that will allow the Saudis to buy more chips from NVIDIA, from AMD, that previously they wouldn't have been allowed to buy under Biden's AI diffusion rules. That's expected to come today. And then we're expected to get a similar deal announced with the United Arab Emirates for the same thing. Now, there are concerns that these 2 countries, the Saudis and the Emiratis, are being used as conduits to illegally smuggle these chips into China. So that's a big question mark. Are there going to be any kind of controls attached to that deal? We'll just have to wait and see what that looks like. Now, we also got some AI bubble news today. Google is creating the AI Futures Fund to invest in AI startups. Oh, call it what you want. It's just an accounting gimmick. It's just more round tripping. They're going to invest money in companies, and they're going to pay for this equity stake by giving them data center credits, which is just coupons for free rental of Google's cloud computing data centers. And of course, when these companies redeem those coupons, Google will book their own money as revenue. Rinse, repeat. Every corner of the AI bubble, they're doing this. Google is getting in on it once again this morning. Guys, we got a lot to talk about. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Don't forget that like button for the YouTube algorithm. It really makes the moderators happy. M&J really wants to see that like count go up, and well, M&J gets what M&J wants. So hit that like button, hit that subscribe button if you're new here. We do this one every single day. And right now, the S&P 500 is higher by 7 points, 0.12%, just barely positive. We did get a little bit of a move up on that CPI news. The market quickly gave that back. Now we're sitting here kind of flat, not sure where we want to go. Now we're going to go out of order a little bit here because the NASDAQ is higher by 60 points, or about a quarter of 1%, 0.28% higher. That one is moving up. I think this rumor of a deal with the Saudis involving AI diffusion probably pushing the NASDAQ a little further into positive territory this morning. That's going to be good news for all the AI stocks. And then we've got the Dow. Look at that big move in the Dow at 6:30 a.m. And guys, you can see it. It was United Health that did that. UNH is the biggest single input to the Dow 30. It's the largest component. And when that UNH story broke, United Health stock dropped precipitously. It took the whole index down with it. Now, we've seen this recover a little bit since then. Right here, this big candle, that was the CPI announcement. But the Dow is still down 145 points, or a third of 1%. That drop made up entirely of UNH. We'll get to that story in just a moment. The DXY, meanwhile, is lower by 42 basis points here, 101.39, still sharply higher than we were in the last couple of days. Now, interestingly enough, since CPI came out at 8:30, we are seeing the dollar move lower here. Perhaps we are getting a little bit more of a dovish Fed. Hey, all the screaming for rate cuts, and when's the Fed going to cut? Will they cut sooner? Well, this CPI data tells us no hurry, right? I mean, it's still higher than the Fed's arbitrary 2% target, but it's trending in the right direction. And so the market is starting to price in maybe fewer rate cuts for this year. Looking over at the bond market, we've got a mixed bag here in U.S. Treasuries. The 30-year Treasury is higher by 1 basis point, 4.897% for the 30-year. The 10-year is at a whole bunch of fours here, 4.444. That is lower by 1 point and change. Meanwhile, the 2-year is at 3.981. That's off by 2 basis points. And the 1 month is unchanged at 4.313. The bond market is not really sure where it wants to go on all this news this morning. Looking over at commodities, we've got a little bit of green in metals here. Spot gold is up by about $5, $3,240. That's about 0.16% higher after a bludgeoning gold and silver took yesterday. Mostly gold took it, actually. Silver responded pretty well yesterday, believe it or not. Perhaps a little bit of industrial enthusiasm caused the selling in gold to be limited to gold, and it didn't take silver down with it because of that trade deal. By the way, coming out later today, I've got an interview I did with Bob Coleman from Idaho Armored Vaults, all about gold and silver. We even mentioned platinum in there. Look for that one around lunchtime this afternoon. Meanwhile, we've got spot silver is at $32.60. That's up by a fraction of a penny, 0.01% higher. We've got copper is up by about 0.6%. Platinum is 1.25% higher. Palladium is higher by about 0.2%. And oil up again this morning, $62.75 for June WTI futures, higher by another 79 cents, or about 1.25% to the upside. Meanwhile, Bitcoin is higher again this morning, $103,771 as priced on Coinbase. That's higher by about $1,000 versus yesterday. We did get as high yesterday as about 105,800 before we sold off a little bit, bounced around. Now, we're pretty much in that same ballpark here. Bitcoin, not sure if it wants to behave like a risk asset or as a safe haven right now. It's just kind of hovering here while the rest of the market rallies. Now, let's talk about this big story here, guys. United Health. This one really surprised me this morning. United Health Group names Hemsley as CEO and suspends their 2025 outlook. In a surprise move, United Health Group on Tuesday named board chairman Stephen Hemsley as its new chief executive officer, replacing Andrew Whitty. The insurer also startled investors by suspending its 2025 outlook, sending shares down more than 10% in pre-market trading in New York. It now expects to return to growth in 2026. The CEO appointment is effective immediately following Whitty's decision to step down as CEO for personal reasons. The company said in a statement, Hemsley will remain chairman. Now, the company said it pulled its outlook as medical costs of many Medicare Advantage beneficiaries new to the company remained higher than expected. United Health is the largest seller of the health plans, The insurer planned a call with investors at 8 a.m. to talk through the changes it outlined. United Health has faced a turbulent run since the December killing of a top executive. The company faced a torrent of vitriol on social media from people fed up with the U.S. healthcare system. In April, the company cut its annual guidance, a rare move for a business known for forecasting conservatively, and reported its first earnings miss in more than a decade. Shares in the company fell 23% in one day, the most since August of 1998, erasing about $115 billion of market cap. So look, this company is in bad shape today. And as far as this new guy, Hemsley, he's not really a new guy. He was their chairman of the board before, and he's been CEO before. Hemsley, who came to the company from accounting firm Arthur Andersen, began his first turn as CEO in the wake of an options backdating scandal that led to the departure of his predecessor. Man, this guy's reputation precedes him. If you guys don't know who Arthur Andersen is the reason why we have the big four accounting firms, not the big five accounting firms anymore, because Arthur Andersen was the accountant who signed off on the books for both Enron and WorldCom, two of the biggest accounting frauds in history. And that firm went bye-bye after those scandals. And apparently that's where this new guy from United Health came from. He was the CEO for a while. When United Healthcare's previous CEO, he got sacked because they were committing fraud with stock options and share-based compensation. I tell you, these guys, they just can't help themselves. What a bunch of dirtbags this company is made up of. Again, guys, I'm not condoning any acts of violence against these people by any measure. Screw that guy. I hope he rots in prison who killed him. But these people are awful. And I suspect we're going to hear something from the DOJ very soon here. The abrupt departure of the CEO tells me that probe into their Medicare Advantage billing fraud is probably going somewhere. And look, these are 1 minute candles on United Healthcare stock. It's currently down 10.26% here. And you can see at 6:30 a.m. is when this big drop happened, right to the minute. And if we go back to the Dow chart, it was right at 6:30 a.m. that the Dow headed lower. So United Health is dragging the entire index down here. More than $100 billion in market cap, up in smoke. All right, let's talk about inflation now. Here we're looking at the United States inflation rate. This is your headline CPI number. This is the lowest we have seen in a long time, 2.3% for the month of April 2025. That is the year-over-year headline number. The market was expecting 2.4%, and of course, that is down just a tick from the 2.4% we got last month. So if you were worried about a sudden spike in inflation caused by tariffs, not yet. You're just going to have to wait for that one. Probably going to happen anyway, just not happening yet. On a month-over-month basis, you can see here the month-over-month inflation rate was 0.2% versus a month ago. That is lower than expected. The market was expecting 0.3%, but I would point out that is up from the negative 0.1% that we had in March. So the monthly number trending in the wrong direction, but not as bad as expected. Now, on the core inflation front, this strips out volatile food and energy. We got core inflation of 2.8%. That was actually in line with expectations and unchanged from the 2.8% we got in March. So kind of flatlining on core inflation year over year. On a month-over-month basis, however, core inflation did tick up a little bit to 0.2% from the 0.1% that we had in the prior month. But I would add that is lower than the 0.3% that the market was expecting. So by most measures, inflation slowed and came in lower than expectations. There are a couple of those, like the monthly numbers were a little bit higher than they were in prior months. But overall, the market viewed this as a beat to the downside. Now, I want to show you a couple of the categories here. This is the actual CPI report, the all items index. There's your 2.3% year over year, your 0.2% monthly number. In the food index, that was interesting. Food was actually a negative overall for the month at negative 0.1%. Food at home got a lot cheaper, 0.4% to the downside. So the grocery store prices went down. I'm sure we're going to get comments from everybody. Don't jump down my throat. Everybody's going to be like, oh, I didn't see my grocery bill go down at all. I'm not saying your particular grocery bill went down. I'm saying the cockamamie CPI math, as they do it, says it went down. I'm not going to defend that number. I'm just reporting what the Bureau of Labor Statistics has given us. Also, food away from home, the restaurant numbers, that is up by 0.4%. So those two just kind of offset each other here. On the energy index, we did return to a positive number overall for energy. We were negative 2.4% for March. That jumped back up to a positive 0.7%. We had things like gasoline got cheaper by 0.1%. Fuel oil went down by 1.3%. But that was offset by things like electricity going higher by 0.8% and a big jump in natural gas of 3.7%. That's a couple of months in a row. Look at these natural gas monthly numbers, jumping 2 or 3% per month for 5 months in a row. This is the AI bubble driving up power and gas costs for everybody. Keep an eye on that one. Let's see. Also going on here, we had new vehicles were unchanged for the month. That kind of surprised me. I thought new vehicles would be heading higher as you had a surge of buyers maybe trying to buy their cars before the tariffs got here. And used cars and trucks, their second consecutive month of negative numbers, down by 0.5%, following a 0.7% decline in March. We had apparel got a little bit cheaper by a fraction of a percent. And here's the shelter index, still at 4% year over year and 0.3% month over month. More than half of the move in the overall index was still being driven by shelter. The rents just won't come down. All right, let's talk about a couple of stories on this trade war front here. Transportation rates are likely to surge during the tariff pause. This one is in Freight Waves this morning. Shout out to Craig Fuller, who came on the channel last week to talk about what was going on in the freight market. I suspect everything that was going on in the freight market is about to abruptly reverse now that this pause is in effect. U.S. and Chinese officials have reached an agreement to roll back most recent tariffs and implement a 90-day truce in their trade war to facilitate further negotiations. Announced in Geneva, the deal marks a significant step back from the conflict that had disrupted the global economy. The temporary suspension of hostilities is expected to have immediate effect on global shipping and transportation markets. Freight rates are projected to rise sharply in the coming weeks as importers rush to capitalize on this window of opportunity. The increases are expected to begin with ocean freight rates in the near term, followed by domestic trucking rates in July and August. This surge stems from importers addressing existing backlogs and expediting new orders before potential policy changes at the end of that 90-day period. This pattern echoes transportation capacity challenges observed in late 2021 and early 2022 as carriers seek to maximize pricing power during an anticipated surge in shipments. So we're going to see everybody cramming to get their stuff in during that 90 days before the tariffs maybe go back up again. That's going to cause a surge in freight rates. That's also going to take those GDP numbers negative. Remember, more imports is a negative to GDP. We just had a negative GDP number last quarter. We're probably going to get another negative one now for this quarter, which would mean we meet the definition of a recession. Meanwhile, we have some additional overtures going on between DC and Beijing this morning. First of all, China removes the ban on Boeing deliveries after U.S. trade truce. This was not included in the text of the trade deal. That wasn't a trade deal yesterday, but here it is. China has removed a month-long ban on airlines taking delivery of Boeing planes, according to people familiar with the matter, following a breakthrough in trade talks with the U.S. that temporarily slashed tariffs on each side. Officials in Beijing have started to tell domestic carriers and government agencies this week that deliveries of U.S.-made aircraft can resume, the people said, asking not to be identified because of confidential information. So those Boeing planes are, I guess, turning around, heading back to Beijing. And on the U.S. front, we've got U.S. slashes de minimis tariff on small China parcels to 54%. By the way, slashes tariffs to 54%, not something you would typically expect to hear. But when you consider how high the tariffs were, okay, it's a step in the right direction. The United States will cut the de minimis tariff for low-value items imported from China, a White House executive order said on Monday, further de-escalating a potentially damaging trade war between the two largest economies. The tariff relief, which affects big Chinese e-commerce players, including Shein and Temu, follows a deal between Beijing and Washington to unwind most of the duties imposed on each other's goods since early April after weekend talks in Geneva. While their joint statement in Geneva didn't mention the de minimis duties, the White House order released later said the levies will be reduced to 54% from 120% for items valued at up to $800 sent from China via postal services, with a flat fee of $100 to remain starting from May 14th. All right, so these are still pretty high fees, pretty high tariffs, 54%. That's ludicrous, right? But it is only half as ludicrous as 120% tariff. So it's being viewed as a step in the right direction, as a de-escalation, although it's still effectively an embargo. Carriers can pay either the 54% or the $100 fee per package, industry experts said. The logistics companies or freight forwarders collect those tariff fees from sellers in China in advance. So things getting a little bit better between the U.S. and China. Emphasis a little bit better. Now let's talk about India, where it looks like things are getting a little bit worse. India weighs tariffs on U.S. to counter steel and aluminum duties. India is considering retaliatory tariffs on U.S. goods. A filing to the World Trade Organization showed, coming as the two sides remain engaged in trade talks. According to the document dated May 12th, the WTO receives the notice on May 9th, and it is being circulated at the request of the delegation in India. Talks between New Delhi and Washington have been in progress since the U.S. announced its Liberation Day tariffs on dozens of countries in early April. Later that same month, the U.S. and India announced they had agreed to broad terms for negotiating a bilateral trade deal after Vice President J.D. Vance met with Indian Prime Minister Narendra Modi. So, this document is being circulated. It appears that the Indian delegation is telling people to circulate this document, maybe a little negotiating via the press here, just kind of suggesting India reserves the right to put tariffs on the U.S. here, threatening to retaliate. They haven't actually done it yet. But this tells me a deal with India is not as close as we previously thought. It seemed like a deal with India was going to be announced any minute now. That is clearly not the case. Meanwhile, we have got lots of talks about chips in the Middle East ahead of us in the next few days. For now, we are talking about Saudi Arabia, the U.S. to boost Saudi AI chip access, even as China issues linger. The Trump administration is preparing to announce a deal granting Saudi Arabia more access to advanced semiconductors, paving the way for increased data center capacity in the Gulf nation, despite concerns from some U.S. officials about its ties to China, according to people familiar with the matter. The agreement would boost Saudi Arabia's ability to buy chips from the likes of NVIDIA and AMD, which are considered the gold standard for training and running AI intelligence models, said the people who asked not to be identified, discussing confidential conversations. President Trump is in Riyadh Tuesday, kicking off a broader Middle East trip, and he could announce the deal as soon as this week. But while the two governments have reached an early stage accord, they're still hashing out a number of key details, the people said. Front and center are U.S. concerns that China could access chips sent to Saudi Arabia, even though the diversion of physical shipments or by tapping the capabilities of those chips via the cloud. One provision under discussion, the people said, would see the U.S. government control access to data centers that use American chips. It's not clear under what conditions or to whom access would be granted. Representatives for the Saudi government and the White House didn't immediately respond to requests for comment. The deal is one of two major AI chip accords that Trump officials are negotiating as they prepare to rewrite U.S. rules governing the export of advanced chips worldwide. Trump may announce this second agreement with the UAE later in his trip, Bloomberg has reported. So this is probably contributing to some of that move up in the NASDAQ this morning. This is obviously going to be good for NVIDIA, for AMD. Although the deal hasn't been signed yet, it looks like this is the whole purpose of this trip. And also, speaking of the AI bubble, I just want to mention this one. Google launches an AI startup fund offering access to new models and tools. In other words, Google is pumping its own revenue by investing in companies, giving them data center credits that they can redeem with the company, and then round trip their own money. Everybody in the AI mania is doing this, and they are picking up the pace. They're getting increasingly desperate to keep this bubble inflated. Google will begin a new fund aimed at investing in artificial intelligence startups, the company announced on Monday. Through a fund it calls the AI Futures Fund, eligible startups will get Google investment, early access to AI models, and hands-on support from Google researchers, engineers, and go-to-market specialists, the company said in a blog post on Monday. They will also get credits to use on Google Cloud. And that's it right there, those data center credits. This is how the Mag 7 have created their own currency out of thin air, using that currency to buy equity stakes in companies. Then as those companies rent out the data centers, redeeming that imaginary currency, the Mag 7 reports it as revenue when really there's no money even changing hands. It's just their own imaginary coupons going around in circles, inflating their revenues. Nobody makes any profit along the way, but it convinces idiots to buy more stock. Select startups get the opportunity to seek direct investment from Google to fuel growth and scale AI development, the blog post states. The fund comes as the company tries to get more exposure to the latest AI companies and trends and inflate their revenue. It also comes as hot AI startups seek alternate funding, as the initial public offering market remains mostly dry amid economic woes, because there's no appetite for these garbage companies with no earnings and in some cases no revenue, and even in some cases not even a freaking product. You can't just take these companies public, and so they're using these private offerings or these secondaries where they're selling their company in exchange for coupons for data centers. This is how CoreWeave operates. This is how NVIDIA operates. This is how Amazon operates. Microsoft does this with OpenAI. Now, look, this is also potentially a way for Google to maintain their bloated CapEx budgets without sinking more money into building more data centers. We can say, oh, we're still going to do our $60 billion in CapEx or whatever their number is. If that's $60 billion, instead of building more data centers, we're creating these data center credits and we're buying equity stakes in the companies that are renting our existing data centers. Well, then Google keeps their CapEx numbers higher. They maintain this illusion of the explosive demand and insane demand for these GPUs, when really it's just a way for them to lower their CapEx spending. I don't know that that's happening exactly, but I suspect that's where this money is coming from, money that they otherwise would have spent on additional data centers. Instead, they're using it to prop up demand for the data centers they already built. Well, keep an eye, guys. As the bubbles, right before the bubble bursts, you have to blow harder and harder and harder just to keep it inflated. And I see a lot of this going on in the AI mania. And I just want to say thank you very much to Mr. Frank. Thank you, Frank, for gifting 10 Nobody Special Finance memberships before we even started the stream this morning. Frank had gifted 10 memberships. So the early birds got their melon heads this morning. Welcome to the melon heads, you 10 early birds. Thank you very much, Frank, for supporting the channel. Guys, say thank you to Frank if you didn't already. And just a reminder, all Melonhead members get one free super chat every month. Feel free to use those, guys, and I will read and respond to your questions or comments live on the air. Thanks again, Frank. Armando Reyes, what's going on, brother? He says, I wonder why Powell never called out Yellen for her stupidity, because they were on the same side. That's why. You think it would be the same as a demon calling out Satan's shenanigans. Well, they're on the same team, Armando. I hate to say it. You know, they both work for they with a capital T. They are both puppets of the banking cabal. They both are perpetual Zerpin burrers. They're both about inflating asset prices. They're both about globalism. So why would one call out the other? They're on the same team. That's why. Now, they were somewhat opposed. Yellen's shenanigans with T-bills and Yellen's Treasury buybacks were counter to the quantitative tightening that the Federal Reserve was engaged in. But that being said, I wouldn't expect one to call out the other because, again, they are one and the same. They're two faces of the same coin. Thank you, Armando, for supporting the channel. And thank you to Wondered Now. Thank you, Wondered Now. I wonder how to pronounce Wondered Now. He says it looks like Coinbase coin is going to start off today up over 10%. What do you think is contributing to the rise? The news this morning on Coinbase was that they will be joining the S&P 500. They are the first crypto company to do so. And so because they are joining the S&P 500, Coinbase will be included in all of these ETFs that track the S&P 500. So Coinbase is rallying because when you join that index, a lot of ETFs, a lot of passive funds now start buying your stock, and people are front running that move. So that is taking Coinbase higher this morning. Excellent question, Wondered Now. Thank you, sir, for supporting the channel. Armando is back again, and he says India is just mad at the fact that the U.S. doesn't want to aid them in their war against Pakistan. Well, look, I guess you're right. The U.S. didn't aid India in its war against Pakistan, but the U.S. did help broker a ceasefire. You could argue that is aiding in the war against Pakistan. By the way, I think we're probably going to read a lot about what happened over the weekend in the future. I think people probably don't realize how close the world came over the weekend. I saw some rumors on Twitter. I don't want to repeat them on the air because it's irresponsible. And there's so much misinformation flying around about this conflict. But let's just say the U.S. intervening diplomatically to bring an abrupt end to that conflict, or at least a pause to that conflict, was done out of necessity, out of fear, not out of anybody's benevolence or goodwill. I think we came pretty close to the brink over the weekend. I don't know that for a fact. I just suspect it. And again, there's a lot of BS flying around on social media surrounding this conflict. We'll just have to wait and see what happens. But I think the history books will write quite a bit over those recent events. Now, I did read that India was not happy with the U.S. brokering that. I did catch that, and they weren't happy with some of the statements that President Trump made following that ceasefire announcement. Now, I don't think that has anything to do with this WTO and the retaliatory tariffs, because the document circulating in the WTO was dated May 9th. And correct me if I'm wrong. Okay, yes, that was last Friday. That predates the brokered ceasefire between India and Pakistan. So one came before the other. I don't think the two are directly related, to be honest with you. Although I could be wrong about that. Maybe it's just India playing hardball at the negotiation table. Thank you, Armando, for supporting the channel. Armando back again says, in regards to SA, do all these deals, Saudi Arabia, in regards to Saudi Arabia, do all these deals, I say, oil, chips, weapons, what have you, but only receive gold as payment? No, I haven't heard anything about gold as payment at all, to be honest with you. Now, I have heard Doomberg mentioned he was pretty excited about this topic in our interview we did about 2 weeks ago. Doomberg mentioned he suspects gold has something to do with the Saudis and with this trade deal, that one of the reasons the Saudis have allowed oil prices to fall, increasing production, driving oil prices lower, besides retaliation against Kazakhstan for violating the OPEC quotas, is that there's some kind of tacit agreement between the United States and the Saudis to allow the price of gold to rise, because the Saudis hold a lot of gold, and an increase in the value of their gold holdings would somewhat offset the decline in their revenue being caused by the lower oil prices. Don't have any confirmation of that, but that does somewhat hold water here. So we'll see if we get any movement from the Saudis this week, any mention of gold. I would watch for the gold price to possibly rally on a Saudi-U.S. deal. That might lend even more credibility to this theory of Doomberg's. I think weapons are going to have a lot to do with this. Saudi Arabia is the regional rival to the Iranians. And so selling weapons, not giving, selling weapons to the Saudis is one possible way to keep Iran in check without further U.S. military involvement. So I think that will probably be included in the announcement. Yeah, I think all of these things happening. I don't know that there's going to be like any direct BRICS involvement, if you will. I know the Saudis are viewed largely as a key ingredient to this BRICS gold-backed currency. I've been very skeptical of that theory for quite a while. I think we're still probably a ways off from anything like that happening. I wouldn't rule it out entirely, but it just seems like it's over the horizon for the time being. Thanks again, Armando. And Charles G says, can the president please stop accepting planes from our enemies? Look, the Qataris gave us a jet. I don't, it wasn't a personal gift to the president. They gave it to the United States. I think they're just out to be, and by the way, the Qataris are not our enemies. The Qataris, they do fund Hamas indirectly, supposedly. I don't know how much truth there is to that. Let's just say they're not saints. That being said, we have military bases in Qatar. We've had a long-standing relationship with the Qataris. I think they're probably playing both sides. They gave us a plane. I think everybody's out to be like, oh, what did they give us in response? Quid pro quo or whatever. Look, they gave us a plane. That's what it comes down to. And the last I saw about this plane is they're going to turn it into a museum. I don't even know what they're going to do with it. Is it going to be the new Air Force One? I don't know. I just think this is the this story is the Trump goggles, if you will, desperate to make everything out to be an orange man bad story. I'm not as excited about this plane as a lot of people have gotten. Let's just put it that way. Thanks again, Chuck G, for supporting the channel. Armando Reyes says, didn't Germany give Russia an ultimatum? Did it work? I haven't heard anything about an ultimatum from Germany to the Russians, to be honest with you. And to be honest with you, ultimatums to Vladimir Putin, I think you're wasting your breath. Vladimir Putin is not the kind of person you give an ultimatum to, because he's going to call your bluff automatically every time. He's not somebody who blinks. All right. I'm not president of the Putin fan club by any measure. I think the guy's a murdering bastard. He poisons journalists with radiation for saying bad things about him. The guy's a freaking tyrant and a monster. That being said, he's not somebody you want to bluff with. That's for sure. So I don't know what kind of position Germany is even in to give Putin an ultimatum. So Armando, I don't really know what's going on here with this story. So I can't really comment on it, but without knowing what the ultimatum was, I'm going to go out on a limb and say it didn't work, whatever it was, just knowing what I know about Putin and the Germans. Thank you, Armando, for supporting the channel once again. And Madison Hypes, what's going on, Madison? She says, interesting Google story. Nobody has best stories. Yes, he does. Just remember, guys, when this bubble pops, and it will pop, and everybody's starting to write about, wow, the accounting fraud, how did we not see this? Always remember, nobody saw it coming. 18 months ago, at least almost 2 years ago now, I started calling out this round-tripping gimmick. Nobody wanted to hear it because numbers go up. Numbers still going up, at least for the time being. Sooner or later, somebody's got to make a profit. And all of these AI companies, OpenAI, Anthropic, Perplexity, Inflection, or is Inflection even a thing anymore? I don't know. Not one large language model has ever sold a product at a profit. Not one. Every single one of these companies loses money on every AI inquiry that is typed into their models. The only reason this bubble is inflated is because of an endless stream of investment capital, which I think you'll probably be surprised to learn is largely your money, your 401k, your IRA being pumped into these stocks or being loaned to these private credit companies in order to keep all these cash-burning dumpster fires alive long enough, even though these companies don't really have any path to profitability. It's been going on for years now. It's going to keep going on. Google's doing it again. CoreWeave did it. Amazon did it. Meta's doing it. NVIDIA does it a lot. Sooner or later, the market will get wise to it, though. They're starting to come around to it, just not yet. Thank you, Madison, for supporting the channel. Chuck G's back again. He says, I'm more worried about it being bugged or worse. Yeah, that's a concern. I mean, it's probably not a good idea to let another country build Air Force One for you. I don't know if that's what they're going to do with the jet or not. Look, if there's a bug in it, you can sweep it for bugs. Or I mean, it's a plane. They gave us a plane. We have a lot of planes. Now we have one more. I really think like that's the whole story here. All right, Qatar gave us a plane. Thanks. And honestly, like the president's response to this was like, well, what do you want me to do? Pay for it? Or do you want me to give it back? They gave us a plane and I took it. That's the story. Yeah, they could bug it or worse. I'm sure. Like, hey, it's the 2020s. Let's not rule it out. Thanks again, Charles. Pigo's Trading Desk says, much love, brother. Much love to you right back there. Tony and Derek over at Pigo's Trading Desk. Thank you guys for supporting the channel. I appreciate that. Armando, again, busy Armando morning. He says, Germany demanded a ceasefire from Russia or suffer severe consequences like tariffs or sanctions by Monday. I mean, they already booted out of SWIFT. Didn't Germany already like divest almost everything they hold Russian or everything they were buying Russian? What is Germany? Of course they're not going to do it. I mean, Russia's definitely not going to back down from that. I mean, okay, Germany made the demand and maybe Germany can place 145% tariffs on Russian goods. Germany's not buying any Russian goods. Where are the teeth in this demand? Unless Germany's getting ready to escalate, unless they're talking about sending more troops or more equipment to the Ukrainians, which let's not rule that out. I mean, I don't know. I think the world has had enough of this conflict. It's been going on for, 3 years now? How many 100,000 people have died in this stupid conflict? And for what? It's like World War I level progress. These lines are not moving more than a mile or two at a time. Like, it's a senseless slaughter. It's just stupid. Just cut it out. And honestly, like, at this point, like, obviously, I think Putin started the war. I know people are like, oh, you don't know the CIA ops and everything that was going on. Yeah, I understand there's corruption in Ukraine, and I understand the CIA was operating forward bases in Ukraine. But at the end of the day, the Russian army invaded, starting the war. All right, that's the simple fact of it. Putin started it, but at this point, it seems like the Europeans don't want it to end. All right, and if neither side wants the war to end, it's not going to end. All right, that's the funny thing about wars. If you want them to keep going on, they're going to keep happening. Meanwhile, people just keep being fed into the meat grinder, mostly poor people who have nothing to do with the stupidity of the leaders that started this stupid thing. Just cut the shit out. I don't know. Seems so simple, doesn't it? But apparently geopolitics is hard. Thank you, Armando, for supporting the channel. Pigo's back again, says, also it's algos buying. Volume is super low. Yeah, the algos are buying on the news, obviously. The algos buying off of that CPI print. I'm not surprised to see that. Look, guys, the detachment between the stock market and Main Street is just getting worse and worse by the day. Sooner or later, that's going to snap back. It's probably not going to be today, though. Thank you again, Pigo, for supporting the channel. Richard Bell says, Trump family crypto dynasty. This MAGA. Are we talking about there's another crypto coin that the Trumps are pushing now, or is it a true social token? I don't know. But presidential shitcoins, I am not a fan, not at all. I honestly, crypto winter is coming. I think it's going to happen by October. Maybe we get another all-time high in Bitcoin. Maybe we get another big bull run. That's looking increasingly likely. That being said, crypto winter will happen again. It's happened 3-4 times already. It's going to happen. Excuse me. And when that happens, presidents who pump shitcoins are going to take a hit in the polls. It's stupid to do this. It's stupid to attach yourself to these altcoins and this crap. And I'm seeing so many otherwise intelligent people doing this. They're pumping these cockamamie coins that are worth pennies. These things are going to be freaking worthless when somebody blows up. We saw it with FTX. We saw it with BitConnect. We saw it with OneCoin. It's going to happen again. Maybe it's MicroStrategy. Maybe it's somebody else. I don't know. But they're still prosecuting all the frauds from the last crypto winter. There's going to be more of them. And I just think it's very short-sighted to be doing this. I think this is among those unforced errors that President Trump is so prone to. I mean, he's making money doing it. So I guess that's the why. He really wants to embrace cryptocurrency. The strategic Bitcoin reserve is expected. There are some things I liked about cryptocurrency. There are some things I like about Bitcoin. I pretty much limit it to that. All this other garbage is just ways to separate suckers from their money. I just see too many people falling for it. They're going to regret it. Even if they make a couple of bucks between now and October, sooner or later, they're going to get wiped out. So thank you, Richard Bell, for supporting the channel. And thank you, all you magnificent melonheads, for having your coffee with us this morning. Don't forget that like button and that subscribe button on the way out. I appreciate all the super chats as well. Thank you guys so much for the generosity this morning. Also, shout out to my magnanimous melonheads on Patreon and YouTube. You guys rock. Thank you for everything you do for the channel. Hi, Mom. Hi, Dad. I love you guys and everybody else. Until next time, live small and dream big.